Capacity refers to the amount that you can use an asset in your business, and we have two types I'll discuss: theoretical capacity and practical capacity, and then I'm going to relate it to work in process. So let's assume you have a machine that's sewing baseball gloves, leather baseball gloves, in your production process. Theoretical capacity says, pie in the sky, perfect, nothing ever goes wrong. The machine runs 8 hours a day, 5 days a week, 52 weeks a year, nothing ever goes wrong. That's obviously an unrealistic way to plan production. Instead, what you'd want to use is practical capacity, which says, let's account for unavoidable stoppages, and the biggest one typically is repair and maintenance expense on the machine, because just like an automobile and other assets that you own, you need to incur these repair and maintenance costs that keep the machine running. So let's say it's 10 hours a month, you have to shut it down. Now, hopefully you can do it at night or on weekends so it doesn't interrupt your production, but maybe not. Some plants run 24/7. So you have to account for the 10 hours that you can't use the machine. That's practical capacity. That's what you should use to plan. Now let's talk about how the costs are impacted in work in process. So flow of manufacturing costs, work in process refers to costs you've incurred for partially completed items. And the way I've always explained it is if you shut the factory doors at night, the items that are partially completed on the factory floor, that's work in process, or WIP, W-I-P. Three components: direct material, direct labor, and an allocation of overhead. Now think about it. If you come in the factory, you turn on the lights in the morning and you press the button to start the machine and it doesn't work. There's a couple of impacts. The first is you've got labor costs for people who were supposed to run the machine. You were planning production and now you've got that cost and you can't run the machine. You've also got costs further down the line, because if you can't get the gloves finished, you can't pack them up, you can't put labels on them, and you can't ship them out to clients. So you've got costs that you should be incurring in WIP to get it from WIP to a finished good, because when you get it to a finished good, you package it, you ship it, and then the other economic impact that you really can't quantify is you may have angry customers, retailers who can't get your baseball gloves and sell them to clients. So this connects capacity, which is how you manage a machine and its production and its cost, to the bigger picture of what's the financial impact if I can't do production.